Hi guys, and welcome to another one of our YouTube videos. Today I'll be breaking down a couple of features of Mt4 because that was requested. And I didn't trade today because low probability conditions, but I'll still do a quick run through of, or kind of like a review of what happened today. So for anyone who wants Mt4, usually your broker has a customized version that's available on their platform. So my broker is Hotforex, recently HFM market, so that's why that's there. Once you download and install, it will ask you to log in. You log in, all info is there. Now, that's the basics. As it relates to customizing Mt4, I'll give you a couple of points that I believe make trading easier. The first thing is creating study profiles. So right here, we could see quite a few tabs being displayed down here. Just different charts, all M5, and it says default, which means this is the default view that pops up whenever I open my Mt4. Now, let's say I just did an analysis of the daily chart or the weekly chart or whatever the time frame is, and I want that to be something I come back to reference from time to time. For instance, high time frame analysis is very useful. Let's say we trade 5 pairs, 3 indices and Euro GBP. Sorry, I mean Euro USD and GBP USD. If you do a daily analysis on all 5 of those, you don't want to do that analysis every single day over and over again. So once you've completed that analysis process, you can click where it says default here on your Mt4, then go to save profile as, and give it a name. You can save it as daily charts, if it's a daily chart, weekly charts, monthly charts, whatever it is, based on whatever you're doing, you could name that there, and then you could always reference those charts whenever you feel like. For instance, if I want to see my weekly charts, I just go right here, it says weekly, and that takes me to my weekly charts. So there I have all my weekly charts. Bam. I don't know why these are still here. I don't trade these anymore, but you could see that Nas is way more updated than all of those because that's what I look at. So you could also see my next upside target for Nas, 11,753.3. There we go. So that's how you can create profiles. Let's go back to the default template. Let's say you marked this chart up, added a couple of indicators, and it's beautiful. Whenever you're looking at a daily time frame, you just load the chart and it gives you maybe separators like these. Where is that? Control Y. So Control Y put the lines on that splits the periods. So if you're on a daily chart and you push Control Y, it splits it into days. If you go to an hourly chart, it automatically moves the separators and it's now dividing it based according to days. So month for this, days for below that. I think if you go weekly, it goes out to quarters, is it? Not sure. I don't remember. Or is it maybe, I think it's the year 2019, 2020. Yeah. So once you're on a weekly time frame, it gives you the lines separating each year. Absolutely no reason for me to do that, but yeah. So let's say you have an indicator here with a couple of moving averages or something, and that's what you use whenever you're looking at a higher time frame. You can save that template here by going to that, save template here, and whatever you save it as, it will be here if you want to click. So do I have any higher time frame charts I could show here for an example? H4915. I don't use H4 a lot, but here it is. If I was to use a H4 chart, this, it's actually not for H4. I think this is actually for M5 as well, but it shows H4 views. So if I wanted to do this, I could have, but not necessary anymore. So I have one saved as a naked chart where there's nothing fluffing up the charts, just naked price action with that background, You change the background or whatever you want by going here, properties, and then you could get that. All good. The next thing you would want, if you're going to be using Mt4 a lot, is to customize the ribbon at the high up here. So it shows M1, M5, M15, M30, H1, etc. And these popular options, you can customize those, add or remove whichever one you want by going to the start of that ribbon. So like this one, arrows, rectangle, etc. The start of the ribbon would be these horizontal line right there. If I right click and customize, it shows me all the options I've already selected inside here. If I'd like to add or remove any of them, I just click that, click remove, it takes it out. If I want to add anything, for instance, absolutely nothing here, let's say triangles, then I would just click insert after I click on the triangle, and you notice the triangle pops up here. I don't use triangles, so remove it and it's gone. Each of these little starts of the ribbons gives you options that you could edit. So I've completely added all the ones for this one. I probably can take out H4 since I almost never use an H4 chart for my personal benefit. Not saying that you shouldn't. But yeah, H4 is now gone. Don't need it. Any of these you want to customize, you can always click on that, right click, see the options that's there, add or modify whatever you want. So once you have your templates created, your profiles created, that's pretty much all you need from those functions. If you don't want to show these, you could always push F11 here to get a little bit more chart space. So remove the ribbon from the top, so you get a little more chart space. If that happens and you'd like to do anything, you'd have to go either File, View, Insert, Charts, Tools, Window, Help, based on what you want. I almost never use Window or Help. I'm primarily using the chart section here, Insert or View. All right. So let's get back to F11. There we go. So everything I need is there. So yeah, those are the basics for Mt4 that everybody needs to know. And let's go ahead and jump into this analysis. Yeah, I'm gonna review now. So when we look at this daily chart for Nas, first thing that jumps out at me is always obvious gaps like that. That's what first jumps out at me. That's not always what I look at. I like to look at the range that we're trading in first, because that gives me perspective. Last week, all this was happening. We mentioned that we'd likely see a drop lower to reaccumulate, and then we could start entertaining long-term rallies for Nas. Still not convinced yet, because we haven't gotten back above this little gap right there. So I'm watching that level for this week. If we get above it, these highs come on the menu for me. I don't start my analysis on a daily chart a lot. I just do that at the start of the week. At the start of the week, I'll check a daily chart. But then after that, I have no need for a daily chart based on my analysis process, right? Which we'll probably talk about sometime if you haven't been exposed to that as yet. At the start of every month, I like to take a look at the monthly chart just to see where we are, where the last month closed in particular, and what are some of the things that I can expect for this coming month. So for Nas, I'm looking for a rally. I'm not sure if it's going to be a sustained rally yet, but I am looking for another push higher above that gap, if we can get above it. If not, then we're going low and we can start entertaining all this slow down here. But for now, it's nowhere near there. And this is a monthly chart, so that's a lot of movement. I don't have to concern myself with that and have a million things on my chart. So most of my analysis is done on this time frame, the hourly chart. Perfect. Now, when you hop on a hourly chart, it's always good to find the swing points, specifically stop hunts and failure swings. So when I take a look at the lows here, I can see that this right here is the lowest low in the market, which means this is likely to be a stop hunt. So I personally like to pay attention to the lows that are formed after the stop hunt. So we can get rid of that. This would have been the next low. There we go. And we'll do the same thing to the upside. We have this right here. We have these right here. This would have been the highest high since we broke here. There's no other swing high that's higher than this in this portion of price. Of course, there are these, but that's so far away, no need to factor in that in now. So since this is the highest one, failure swings after would have been this or this. Either is fine, still relatively equal. Just to stick to the rules, I'm going to use that one. Actually, don't like this one because it's a doji. I'm going to use this one here. High. So now I have the high inside the trading range that's likely to be housing liquidity. Both of those have been outlined. Now we can get a little bit more precise after that and take a look at order blocks formed around these levels, in particular bearish order block, bullish order blocks if you want. I'm not a big fan of that, but any order blocks here that I like? None. This one looks nice. Order block, then big void, but there's nothing about this that I like where I would mark that out, right? On the downside, I have this down candle, huge down candle, right? Right before the stop hunt must be sensitive. So I can mark out the opening price of that. Now I'm assuming and doing this analysis based on the approach that this run below here has not yet happened. So I'm still looking at the range and then moving up towards current market price. So I'd be focused on here. If we're bullish, markets are likely to accumulate below here, then trade higher. If we're bearish, it's likely to accumulate here, then trade low. So that becomes my trading range. Once I have my trading range and my hourly liquidity identified, there's really nothing else I'd need from an hourly chart. In particular, this one, because there's no obvious gaps. There's no other obvious gaps right here. If there was a gap, I would pay attention to that. We could argue that this right here is a gap. But again, we're working on the premise that that hasn't happened yet. And this is where we are. So that gives us an appreciation of looking at this bit of price on a lower time frame, how it played out, and what was actually present that we could have used to frame an idea for going long. So now I'm going to a 5-minute chart, as I always do. Once I'm on a 5-minute chart, if we go back to that day, this is the liquidity pool. I would be paying attention to time of the day at this point to position myself for getting into a move. I don't trade before 8 a.m. I trade between 8 a.m. New York time and midday primarily. So any price action structure around here, I would be using that window of time to position myself into getting in. I'm going to review the last day, which is today's price action, and then I will implore you to take a look at this portion of price using the steps that I'm going to use in a second and try to see how we could have positioned ourselves here. If you're in my Telegram channel, feel free to send some charts in the group and we can talk about it. So let's dive in. This was no trading day for me. If I was trading, my analysis process would go something like this. These are the levels I'm anticipating to be sensitive. Why? These are logical levels that price can react from. Liquidity pool. We've already stopped onto that liquidity pool, so no need to see price go back here. So we can take that off right now because we've already stopped onto that. If we're looking at it from the day the liquidity pool was created, then we will be anticipating a run below. Now, looking at today's price action. Again, I don't start trading before 8 a.m. On this broker, it's 1500. So wherever that is, here. Cool. Now, I can mentally block out all of this. If you can't, take off the scroll lock just push that price action there and kind of zoom into right here and focus on it. Makes it a little bit easier until you've trained yourself to not form fit what you see just because you can see it. Now that I have 8 a.m. highlighted, I need the previous session's range. Before 8 a.m. New York time, the last session would have been London. I'm gonna highlight London open kill zone from 2 a.m. to 5 a.m. ICT's definition, which is what I use. On this broker, 2 a.m. to 5 a.m. is 9 o'clock to 12 o'clock. So we have that here. Then we have 12 o'clock somewhere inside here. That's my range. So just like any other range of price, once you're going to do an analysis there, I want the high and the low of that range outlined. And probably already know the next thing I'm going to be looking at, which is the midpoint of the range. Slap me a vertical, a horizontal line right there. And there we go. Asian session is also good to outline. I'm gonna go Asian session. The range I use for Asian session is 8 p.m. to midnight, probably typical definition everywhere, which is 3 p.m., 3 o'clock on this broker to 7 right there. That's my Asian session. I'm taking the liberty of doing this so that it becomes a little bit easier to appreciate, and the fact that you'll understand why we use templates for these, because it takes a while. So if this is Asian, this is London, you could always label it. But then the next important price is going to be the opening price of this candle, which is midnight opening price. There we go. So going into New York session, I have everything I need right here to make a decision. I can see that Asian high and London high relatively equal. We had a very shallow run above Asian high in a market that I am going in or coming into this week expecting bullish price action, because I want to see price trade back to that open gap. So if I'm expecting bullish price action, I'm going to take a look at all the failure swings to the upside. So the highest one, which is this one, immediately becomes disqualified for me. Plus I already have a upside target from the daily chart, from the hourly chart. But for short-term targets, we have failure swing here. This is now the next highest high, or the lower high, for being precise, talking about classical market structure. So those would have been the two failure swings after the stop hunt. There we go. Why is this a stop hunt? Because it broke through this high. There we go. So you can slap a small X on it like there and say that's your stop loss. Those are your stops that we're taking here. These here are stops not taken. So just put that there. Those are open stops. I mean, that was taken. These are open stops, and this is open stops. Now, at this point in time, the trading range of the day is going to be from Asian to London. I don't factor in previous price action. So this is the opening of the day at, I think it's either 6 or 5 a.m., 5 p.m. It really doesn't matter for me, because I'm not going to look at this as being significant. In terms of volume, we rarely see volume coming into the market at opening unless it's a volume imbalance or a big gap. So I don't pay attention to that a lot. Asian session, we know volume is coming in. London session, we know volume is coming in. So I primarily look at that. So if I take a look at the range from Asian high to the lows right now, that is the trading range of the day. Now, this line was 50% of London. I'm also noticing that 50% of the trading range is also inside right here. So loosely, I could look at that portion right here because of all the confluences that are there. London midpoint, midnight opening price, 50% of the trading day. I like this because price is being kept inside this range. So if we are bullish, like I believe, I could see, or I'm likely to see price trade below 50% and then move higher. That would be ideal for getting entries. Now, that's one part of the equation. I'm bullish. I want to see price run below here. This is going to be the target that I'm going to be looking at. Conceptually, if I just take a look at midnight opening price to my objectives here, then the best case scenarios, that's a 83-point move. I can easily get 50 out of that and be content. Now, let's take a look. So scroll over a little bit. Let's take a look at ATM opening price. In this range right here, we have the 8 a.m. opening price in the premium portion of the range. If I'm bullish, I don't want to see impulses starting in premium, or I'd feel much better with missing that move. What I want to see for an ideal scenario is price to trade into discount, find a bullish order block, or run sell side liquidity in discount, then market structure shifts to the upside, then I start stocking entries. Between 8 a.m. and 9:30, when equity is open, is usually where you see your entries forming. So since this is 8 a.m., equity is open at 9:30, would be 16:30 on this broker. Slap that on. Here. Now let's take a look at this. Here's 8 a.m. Here's 9:30. This is where we want to see our entries form. None of these prices are inside the area that gave us the most confluence for an entry pattern to form. What do? We don't trade. I wasn't trading, but that's where I would be looking at. Okay. Now, eventually price traded down inside here. We can all see the market structure shifts, possible entries, and then a rally. The target was there. We can see the reaction that happened around that target. But what if we were patient, since we only trade 8 to midday, which would have been 19 on this broker, here. And that would have been probably the PM session, I guess. Actually, it's the start of today. But anyway, inside here is where we're going to be looking to trade. Either we get an entry and target, or the entry forms and we don't get targets hit, like today's scenario. We know where we want to see our entries form. We know where the market is likely to trade to. And last thing is, where do you consider yourself wrong about this trade? Since we're using here for the most confluence, this range of price is where we want to see our entry model get formed. So that's a roughly about 11-point range. So if you're looking at, I don't know, overbought, oversold indicators, inside here is where you want to see that give you your pattern, whatever that is. My entry pattern is pretty clear. I'll actually show you guys a little bit about that today. And there's how it played out. If you're a limit person, looking at confluence around here, if you enter anywhere inside that range, or maybe you split the range in half, put a limit in the middle, put your stop below, or maybe 10 points or 20 points below the opening price of the day. Possible. Or look inside London range or Asian range for an order block that you could use to key off for entries. These are your order blocks. So many of them. This is the lowest one, so naturally stop hunt. Then we have these. This one is ideal. That's where we'd be looking for, and a lot of other entry patterns inside here. One pattern that's jumping out at me immediately is the AMD pattern: accumulation, manipulation, distribution. It's low volume, so it may be not as sharp and aggressive as we're used to, but it is here. Take a look at this portion of price right here to here. We can see that price is being held in a very tight range going into 9:30. Then we had that manipulation that started a little bit before 9:30, ran down, midnight opening plus our confluence area. Price stopped, trades higher. This would have been the last short-term high inside here. That would have been broken. We're looking for retracements here. Order pair in theory. Find the high, find the candle that closed above, extend that out in time. There's your entry, right? If not, and you trade my model, we'd be going back inside here to find an order block to key off of, which in this case would have been this one right here. Tag the opening price right there. That's what we'll be looking to enter. Game over. Entry, stops, target, boom. Take this to a 1 minute chart just to refine for the sake of refining. Midnight opening price right here. Price trades down to midnight opening price, which is a key level. Rejects, market structure shifts, trades higher, market structure break right there. So again, this would have been that high where we used to find order pairing. So let me just do that here. Order pairing high here, an order block gets formed right there. So we know that they're buying all of those. Displacement right after. Where did displacement start? In the order block. So again, tag that. And you could have gotten in earlier than my model, which would have given me an entry somewhere around here. Somewhere inside here. There. Yeah, all of that would have been an entry. If you're looking at that, it's maybe about 6 points minimum drawdown. So if your stops anything above 10 points, you're fine. If you entered right at that line, 10 points below comes down here, price didn't get to that. So it would have been a nice trade. And then here's how it played out. So covered all the Mt4 basics that some persons wanted to see. We get that. Today's price action is here. It was a little bit tedious to draw all of these, right? Which is why I have a template that does all of this for me. So this window of time, bam, bam, is outlined like that. Bam, bam, see? So it does all of that for me. Entries inside the green box to that point. Game over. These are Asian deviations for confluence. That's something else. Here's another view of the same model. This one, in comparison to this one, has two differences. One, no Asian range, midnight opening price. Lots of confluences inside here. Scroll back a couple of days. Lots of confluences inside here. Midnight opening price, London range, time. Time and price meeting right there. It's a party. Again, midnight open, failure swings, the opening discount, Judas, shift, targets. Just added a couple charts with the same idea just to kind of outline. Here's a nice example to study. Here is midnight opening price with an impulse that started, small impulse, order blocks, and price pushed, but we didn't get back to midnight opening price. So you can study the price action in here and the fact that there's your order block. which justifies why price does not have to get back specifically that opening price, but you can key off the order block. Or if you see it, those short-term highs inside there. There. Cycle for a couple of days. Same thing happening over and over again. Added a few other charts for guys that I know trade other pairs. EU, London, rally, ATM. We've already made a high. Order block displacement, keys off, displacement, order block, bam, targets, game over. ES, pretty similar pattern like Nas, midnight, London, market structure shift here, order pairing, perfect. Wherever the target on ES was, I'm assuming it was close to Nas. There's how it played out. And the one pair I don't like, GU. Same idea. London, rally, high, stop point, shift, entry, targets. Everything is happening inside my window for trading. I'm not trading outside here. I'm not stocking setups outside here. I'm specifically waiting for the model to form in here. So hopefully that was a little bit more helpful, and I'll just show you guys a couple more days of that. Nice market maker model here, right? You can see where the liquidity is. If we were Ninja, we could have caught smart money reversal or market structure shifts in here. You can see where the draw on liquidity was. Got there, game over. Same thing again. London, relatively equal highs. ATM, stop point, small shift here, more shift here, everything below midnight opening price. So that's a done deal. Beautiful. Game over. So this makes analyzing a little bit easier. Just create a template, save it, load it on whatever the chart is that you want. And yeah, last bit of advice, stop looking at highs and lows. Failure swings are the way to go. That actually rhymes. But yeah, hopefully this was enjoying and a little bit more informative. Enjoy the rest of your day and see you guys tomorrow in the group.